what is really driving Bitcoin's price? Is it the new issuance? Is it the halving every 4 years that reduces the supply? If you just look at the very small wallets, the halving still is relevant. So have a look at the supply change for all the wallets that are considered small shrimp. Sometimes they buy, sometimes they sell, but in general, the fluctuations are still quite small relative to the issuance of Bitcoin. The picture very much changes though once we include the wallets that have 1 to 10 Bitcoin. Now we see that there are periods where that wallet cohort buys at a quicker rate than the Bitcoin issuance, and sometimes they are selling at a rate that's putting even more downward pressure on the price compared to the additional Bitcoin that hits the market every day. Now here is the big surprise. This is the wallets with 10 to 100 Bitcoin. We can also isolate them on the chart. Just 2 halvings ago, those wallets didn't have that much impact on the price relative to the issuance. The issuance tended to be larger than the purchases by those wallets. But this has changed now. And have a look at what happened recently. This is, by the way, a 30-day average. Those wallets have sold massively. The shrimps didn't do much. The crabs did a little bit, but really it's the wallets between 10 to 100 BTC that caused the Bitcoin price to fall from 125k to our current levels. We can also smoothen this out a bit more to get rid of the volatility. So instead of looking at the 30-day average of the supply change, we can have a look at the 90-day average. And then the picture changes from this to this. It looks like this wallet cohort has learned over time. In 2017, they still got very excited and bought at the top and got then completely wrecked. They also tended to sell close to the bottom when Bitcoin was 3.5k. So there was a drop from 20k to 3.5. But then those kinds of investors tended to wisen up. They bought the bottom after the FTX collapse when Bitcoin was at around 20k. They then sold some once we hit a new all-time high. They bought after a retracement and then they sold again when BTC hit 72k and 100k. But the interesting thing is that now this cohort is selling much more aggressively than we usually see. It's actually the highest outflow we have seen during the entire history of Bitcoin. And it's important to note here that those outflows, they are measured in Bitcoin, not in dollars. So Bitcoin over all of those cycles, of course, went up. And if you measure this in BTC, even when we have the increased price, we see now much more outflows. So this is a pretty impressive signal. There's a lot of panic by the wallets that have up to 100 Bitcoin. Now, how much is 100 Bitcoin? It's close to $10 million. Again, the small wallets to pretty much nothing. They did also buy during the dip, but they are not taking profit. The somewhat larger wallets, they are taking a bit of profit. At least they did so when hitting 100k and 125k. But it's really now the very, very large wallets that are still offloading at the current levels. Now there is a data point that seems to not really make sense. When we look at the very, very large wallet, we actually see inflows, but that's only in the recent past, and there is an explanation for that. So have a look at this here. This is the wallets between 1,000 and 10,000 Bitcoin. So this is exchanges and institutional investors. And these inflows here, they have been attributed to wallets that are owned by Coinbase. So once we look at these slightly smaller wallets, when we see those outflows here, 1 order of magnitude lower. If you're enjoying this video so far and you're getting some value out of it, then feel free to give this a like. It will help the channel grow. It will help spread the word. Thank you very much. This seems to have gone to those new consolidated, somewhat larger wallets. But again, when we take wallets that are definitely not institutional, so 1 to 10 million in holdings, we also have selling pressure here. So those are not Coinbase related wallets. Those are wallets by rich individuals and potentially family offices, maybe hedge funds. A lot of that selling might be due to the fear that 2026 will have very bad price developments again, that we will enter a bear market, that maybe the 4-year cycle prevails. What I'm mainly looking at is this here. How much money is actually flowing into the space? Are people converting their fiat currency in their bank account into stable coins? So are the stable coin issuers printing new money? Whenever you transfer your money to a centralized exchange, say via a bank transfer, that centralized exchange will send over the money to a stablecoin custodian. And the stablecoin custodian will hold those funds in another bank account, but then also issue stablecoin tokens like Tether or USDC on the blockchain. And we can see this issuance of new money in this chart. So when this is going up, money is flowing from traditional finance into crypto. When this is going down, then people are withdrawing from the crypto space. Since October of 2023, we see stablecoin inflows. We see how money is getting deposited into the space. And the problem that I currently have with this market is that the growth rate in the last 2 months was very much atypical. We grew by less than 1% over the span of 2 months, while in the past, over 2 months, we tended to grow by more than 11%. So the growth has slowed down, and as long as we don't see new money getting into the space, it will not be that easy to push prices up again. Now, we might go up medium term, because when we look at the stablecoin market cap relative to all of crypto, we are very high, so there is a lot of dry powder on the side ready to get deployed. But we need a catalyst, we need a positive story that will lead people to get risk on again, that will lead people to swap into riskier assets again. There is a negative correlation between the stablecoin dominance and Bitcoin. So whenever the stablecoin dominance is low, the Bitcoin price tends to be high. Whenever the stablecoin dominance is high, the Bitcoin price tends to be low. So we might be relatively low. Currently, we are close to 10%. The last time when we went from 10% stablecoin dominance to 5% stablecoin dominance, the Bitcoin price more than doubled. So that's the bull case. If the larger wallets stop selling and we get a reason to buy back in again, the Bitcoin price could increase by 126%. So that would mean a new all-time high close to $200,000. That's the best case scenario if we continue to see lackluster inflows. Without additional inflows, we are not going to see prices above 200K. But if we do have a reason to become optimistic again, if all the traders that are currently scared suddenly have a reason to be bullish again, 126% of gains is what we can hope for. By the way, I want to wish you a Merry Christmas as well. Hope you're enjoying the time with your family. There will be a new copy trading vault that starts at the beginning of January. The 1st of January will be the launch. If you want to get the exact same trading performance that I got in the last year, I've shared this several times in this channel, and feel free to sign up for the premium membership. The link is down below, thebitcoinstrader.com. This is also where there's more detail. Thank you for your support throughout the year. Let's hope for the best for 2026, but let's also be realistic. Let's try to hedge ourselves against the potential bearish scenarios as well. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you on Premium. Cheers.